Hi, everyone. This is Angela Brown, Project Lead with YCC. We are going to get started with today's webinar, Making Youth Money Smart with Financial Literacy. So, Maisha, I will turn it over to you to get started. Who's our moderator?
Thank you so much, Angela, and I want to welcome you all to our Making Youth Money Smart with Financial Literacy. This is Isha, manager from the National Office. We do know that financial literacy is one of the components that we want to provide our young people, regardless if they're part of the Youth CareerConnect program or any program, so that they are eligible and ready for the workplace, understanding their paychecks, understanding different banking methods. Different banks are not the same as I'm learning. So we want to share one of these wonderful tools that FDIC has put together called Money Smart. We have shared it before on various resource lists, and we have our colleague here who is able to share with us this program. So the objectives, Andrew, good objectives, I'm in here now, is to learn how to use FDIC's free financial education resource. And again, we want you all to use this, play with it a little bit, use it in your classroom, share with other colleagues about this wonderful tool. We also want to talk about the innovative standard aligned curriculum that has been built into this tool, and that incorporates English, math, and social studies. And we want to talk about, learn more about other free federal resources and talk about how financial literacy can be integrated into your YCC program. I'm excited to say that this program is not only offered in English, but it's also offered in Spanish as well. So we have Tracy Morris here with us, who's a Senior Community Affairs Specialist with FDIC, which is the Federal Deposit Insurance Corporation. Of course, Tracy, none of us really always know what FDIC stands for. I'm sure you're going to give us a little bit of breakdown, besides it being that little sticker on my banking area when I go to the bank, and it says it's protected by the FDIC, Tracy. So I'm going to turn it over to you so we can learn some more about this wonderful tool and learn how we can incorporate it into our classrooms. Thank you so much.
Thank you, Maisha. And first, I'd like to thank Department of Labor and Youth CareerConnect for allowing me to come and chat with you today. As Maisha said, many of you may not know what the FDIC does, the Federal Deposit Insurance Corporation. We're an independent federal agency created by Congress in 1933. Our mission is to maintain the stability and public confidence in the nation's financial system. We do this by three interrelated responsibilities: insuring deposits, bank supervision, resolving failed banks, and finally, economic inclusion. I'll go through those at a very high level, and there's a lot, and it would take 2 months to describe each of these, but I'm just going to do a very brief summary of what each of those means. First, a bank cannot operate in the U.S. without deposit insurance, and they must pay into the insurance fund held by the FDIC. This fund protects each depositor up to a minimum of $250,000 at each bank. Stocks, bonds, mutual funds, and other investments are not covered by bank insurance. So I just want to make sure that we're just talking savings and checking and CDs, that type of deposits. But to find out more about the deposit insurance coverage, go to www.fdic.gov. There's a plethora of information out there that you can use to see if your funds are insured by us. And important to note that FDIC insures bank deposits. The NCUA, the National Credit Union Administration, they insure deposits at credit unions. Second, to determine the amount that a bank must pay for its insurance, the FDIC's bank supervision team, along with state and federal regulators, will periodically examine a bank to make sure that it's operating in a safe and sound manner. Simply put, banks that are deemed risky by the examiners will be charged more for deposit insurance than their less risky counterparts. A bank's risk rating and its deposit base determines how much they pay for their premiums. Just like a bad driver with an expensive car pays more for insurance than someone with a safe driving record and a mid-price car, a bank with a large deposit base and a high risk rating will pay more for its insurance than a bank with a very good rating. And again, more information can be found about our bank supervision program at FDIC.gov as well. Finally, if during the supervision process a bank is declared unsafe by its regulators, its charter will be revoked. And when the charter is revoked, it's put into something that's akin to a bankruptcy. At that time, the FDIC will be appointed receiver, and we will resolve the failed bank. When it's apparent that a bank is close to failure, the FDIC begins working to find a safe bank in close proximity to buy the assets of the failed bank. And oftentimes, most often, we are successful in doing that. And to the general public, it looks simply like a merger. Any losses incurred during a bank failure are absorbed by the bank insurance fund. In addition to the three components of our mission, the FDIC also seeks to expand access to the financial mainstream by encouraging financial education and promoting economic inclusion. Many young people transition to adulthood without having developed good financial skills and habits, which are the building blocks for a healthy financial future. The PISA study, which is conducted by the 35-member Organization of Economic Cooperation and Development, found that nearly 20% of U.S. 15-year-olds lack basic financial literacy. At best, they may be able to differentiate between wants and needs or recognize common financial documents, but little beyond that. And fewer than 10% of our youth who participated in the study scored in the highest level. Contrary to what we may believe, students in more advanced economies did not score higher than their less wealthy counterparts. Students in countries with a commitment to financial literacy tended to score higher. In fact, China their youth scored the highest on the test in 2015. Research shows that financial literacy is best acquired through the school curriculum. In 2016, 45 states included personal finance in their education standards. However, only 7 of those states test on those concepts. Financial education can instill concepts at critical development stages and shape a young person's financial habits in ways that can last a lifetime. Elementary school kids learning financial education have improved knowledge and attitudes towards saving and financial institutions. And young people who receive financial education at during high school showed improvement in how they manage their credit later in life. So by getting kids early, by getting youth at critical points in time, is going to help them later in life with their financial goals. To support its financial inclusion program, the FDIC developed its first Money Smart product, Money Smart for Adults, in 2001. Since then, we have expanded our curriculum to include youth and older adults. On the left-hand side of this screen, you'll notice the various curriculum as well as the additional resources that I'll cover later in the presentation. In collaboration with the Consumer Financial Protection Bureau, the FDIC developed a free standards-aligned financial education series for grades pre-K through 12 called Money Smart for Young People. There are 4 age-appropriate curriculum in the series, including grades 9 through 12. Each curriculum includes resources for teachers, students, and a parent's caregiver guide. I'll take a few minutes to discuss these materials. First, the Educator's Guide offers lesson plans with hands-on activities to promote student participation in the learning process through examples. All lessons are structured as follows in the educator's guide. There's a warm-up that introduces students to the topic, hopefully sparking their interest. Guiding exploration, which integrates learning objectives with teacher support and guidance. And through classroom discussion and activities, students begin connecting the concepts to their own lives, such as connecting their non-financial goals with their corresponding financial goals, such as they want to save for specific, maybe a pair of shoes, maybe a new wardrobe to start the summer. That would be their non-financial goal, and their financial goal would be the actual act of saving. Money Smart tips are provided throughout the lesson to offer additional guidance, and then there's an independent exploration activity that's designed to engage students in the learning process through individual discovery, research, and interpretation. These may also be used as homework assignments or as group exercises. Finally, in the educator guide, there's an answer key, glossary, and standards chart that provides a teacher with additional information to confirm their understanding of the lesson, define key terms, and check which activities meet specific education standards. Vocabulary words that are found in the glossary are bolded in each lesson as they are used. Additionally, there are grade level modifications that provide recommendations for beginners and advanced learners. So it can be tailored to your specific classroom. Additionally, each lesson plan includes an estimated presentation time, although your actual time may vary depending on how much time you have to spend and how much interaction you have with the youth in your class. Finally, in this, the teacher guide, there's pre and post assessments that are integrated throughout the lessons. There's the teacher presentation slides, which provides visual aids, classroom challenge exercises, and prompts to support the lesson's activities, followed by a student guide that includes worksheets and resources to let students explore the topics covered in each lesson and apply their knowledge. This guide includes handouts for use outside the classroom as well. The worksheets found in this guide may also be found in the in the educator's guide. Not pictured on this slide is the parent caregiver's guide. This guide provides information about topics being covered in the class, conversation starters, online resources, along with activities to engage their student for parents to engage their students outside the classroom. These parent caregiver guides are available in Spanish and can be used to support classroom learning or as a standalone by parents whose children are not learning Money Smart at school. Money Smart for Young People is aligned with several key education standards, such as the Common Core State Standards for English, Language Arts, and Mathematics, National Jumpstart Coalition's Financial Literacy Standards, the National Standards in Economics by the Council for Economic Education, and the Partnership for 21st Century Skills. There's a comprehensive table at the back of each of the lessons in the educator's guide that maps each lesson to the connections to each of these standards. I'm going to take a few minutes to walk through one of the lessons to show you how it can be the three components, the educator guide, the student guide, and the student handout, or the presentation slides work together. Everything that you need to teach one of our lessons is in the materials. You won't have to create anything yourself. So first, I'm going to walk you through the table of contents. You'll see, and we'll look at it in a different way momentarily, but here you may be able to see that we have 22 lessons, and for this particular walkthrough, I'm going to use lesson 3, Can You Pay Your Bills? The right-hand page provides the learning objectives and the estimated time required. For lesson number 3, the learning objectives are to develop a plan for spending and saving, create a system for keeping financial records, and identify personal income and expense for cash flow management. The estimated delivery time is approximately 50 minutes, and again, these can be tailored to the amount of time that you have to spend in class. Start by downloading the materials from www.fdic.gov/moneysmart or www.fdic.gov/teachers. Become familiar with the materials and refer to the glossary for any unfamiliar terms. Copy the student handouts and review the presentation slides. So in front of you on this particular slide, you'll see all of the components that you would need in your classroom. We have the student handouts, we have the educator prompts on the left, the student handouts, and then the presentation slides. As you review the materials, think about ideas that will resonate with your students. For example, on this slide, you may mention, it talks about beware of the little expenses, a small leak will sink a great ship. So on this slide, one of the things that I always think of is from my own personal experience is that $4 Frappuccino at Starbucks every morning may not seem to be that expensive, but if I start spending $4 every day, that's $20 a week and over $1,000 a year. Now, depending on where you are, Starbucks may not resonate with your class, something else might. So just think of examples that will help you connect with your classroom. And one of the pushbacks for something like a Starbucks may be, well, I get free Wi-Fi there. There's also free Wi-Fi at most libraries. It's just a matter of choice. So they go to Starbucks, spend $20 a week, or they go to the library and it really is free because there's nothing there to buy. In step 3, the guided exploration provides an opportunity for students to discuss the learning objectives. In this lesson, again, you've got the teacher guide on the left-hand side of the page, the display slide, and then a handout for the students. And in this lesson, they would examine a teen's spending habits and look for opportunities for that teen to decrease spending and save some money. It's always easy to help other people save money than it is oneself. I know that from personal experience. Okay. In this step, students are introduced to an income and expense exercise and determine whether the teen is earning enough money to meet his obligations. They look at the teen's income streams, fixed and variable expenses, and learn the concept of cash flow management. In this final step, the students will review income streams and expenses that are typical for their age group. And if the income doesn't support the expenses, they're encouraged to think about ways to decrease spending or increase their income. So this would be an opportunity for the teacher to have the class brainstorm ideas. Will they be able to decrease spending, or do they need to get a job? Do they need to find, do more babysitting? What needs to happen? So that, in a nutshell, is how the curriculum is set up. And in a few moments, I'll walk you through how to download it. But everything is meant to be in one place so that it's all packaged together. And really, other than making some copies and putting things up on a slide, PowerPoint, or you could even hand them out to the students, everything is there for you. Next slide. Here, as I mentioned earlier, this is our table of contents. It is organized along, in this particular view, it's organized along themes of earn, spend, save and invest, borrow, and protect. And if you're interested in mostly teaching earnings or spending, you could come and pick out the particular lessons that correspond to those themes. These can be taught they are standalone lessons. They can be taught just in one lesson. They can be taught in the series of 5 lessons. You can teach them in any manner you want because they're beginning to end in terms of the process. Also, I'd like to mention that I mentioned earlier that we have crosswalked the lessons to some of the school standards, but we've also developed a document to align Money Smart to the Workforce Innovation and Opportunity Act Youth Formula Financial Literacy elements. We've done a crosswalk to both the Act and to the regulations. For example, WIOA's implementing regulations suggest that a financial education program should include the ability to create budgets, initiate checking and savings accounts at banks, and make informed financial decisions. We've identified Lesson 2, which is Financial Planning, Lesson 3, Spending and Budgeting, and Lesson 5, Choosing a Banking Partner, as lessons that support those objectives. Both of these documents will soon be available on the FDIC's Money Smart webpage. And now I'm going to do a walkthrough of how we download Money Smart. And I want to reiterate that not only Money Smart, but all of the FDIC and our federal partners' financial literacy resources are free. And speaking for the FDIC's, our Money Smart products are all, none of them are copyright protected. You can take them and you can actually take these and brand them. If you wanted to put your own logo on them, you may do that. If you want to rewrite a section, that's something that you can do as well. Can we go back a page? Oh. Here. So I'm going to come up through the, I want to go to, can I drive? I want to go in through the teachers link. So, okay, so www.fdic.gov/teachers teacher, and this is the portal where not only will you have access to Money Smart for young people, but you'll also have other resources, videos showing how other teachers have used the program. So I'm going to go through Money Smart for Young People, grab that link, and then under the download, I'm going to scroll down grades 9 to 12, and you'll see the pre-K 3 through 5, 6 to 8. I'm going to walk you through the grades 9 to 12, so I'm just going to click download. Here you have the opportunity to select everything, and I recommend against that. I would recommend basically finding the lesson that you're most interested in or selecting just the educator guide. But I'm going to select just lesson 3, and by selecting this lesson, I'm going to be pulling up the educator guide, the student guide, as well as the teacher presentation slides. I'll add this to my cart, and I'm not logged in, so I've got to log in. And if you have not registered for an account before, you'll need to do that. So I'm going to log in. And I wanted to walk you through this because it seems to me like there are quite a few steps. So, but once you go through it, you'll realize it's not that difficult. It's just knowing ahead of time. So now, now that I'm logged in, I need to go back and pull that again. So this is coming through a different portal. I'm finding the Money Smart 9 to 12 downloadable again. I'll deselect all of the lessons, pick up lesson 3, scroll down to add to cart, and you'll notice now when I scroll up there's a shopping cart. I'm going to check out. Again, these are all free, and when I've had people call me and they've seen checkout, and they're very confused because they think they may have to pay for something, but this is all free. So I'm going to scroll down. I have the opportunity to answer questions. I typically don't do that, but you can. It actually helps my colleagues with some of their research, but I'm going to click Continue to Next Step. And there's a shopping cart that comes up again. I'm going to continue to next step again. And now I have the opportunity to download lesson 3. I'm going to open that file, the zip file.
It might just be thinking.
Okay, in the zip file, it's going to open 4 files for you. It will have the teacher presentation slides are going to be available in PDF and as a PowerPoint. And the educator and student guide is going to be available as a Word file and a PDF. The reason that they're in PDF and the other formats is, again, if you want to take this information and incorporate it into other materials or to change it in any way. We're trying to make this as easy as possible for you. So next slide. Okay. Some of the other resources that we have is a Money Smart News. That's a quarterly newsletter featuring tips, updates, and success stories for financial educators. You can view it online or subscribe to an electronic version. Submissions from educators are always welcome. So if you've used it in your classroom and you have some good tips or something that you'd like to share, we're very happy to receive those types of stories. The Money Smart Alliance members, that's a group that's recognized for their contributions to, for delivering Money Smart to consumers. Alliance members are available to support your efforts, so if you ever wanted additional resources, you can contact one of the Alliance members, and they would be they should be willing to help you, whether it's coming to a class and doing a special presentation. The Alliance members can be found at fdic.gov/moneysmart. In addition to that, we have a staff in each of our regions who their whole purpose for being is to foster initiatives that create positive banking relationships between consumers and financial institutions. They develop products and present training programs on financial education. We're also refining our materials to support the WIOA Youth Formula programming, and if there were special needs for the YCC, you can reach out to us and we would probably be able to develop, to tailor some of our training materials to that as well. We have an FDIC consumer news that provides practical guidance on how to become smarter, safer users of financial services. Issues and articles offer helpful hints, quick tips, and strategies to protect and stretch our dollars. And periodically we do issues that are basically geared towards young people and making sure that they start off on a right foot. MyMoney.gov is a website produced by the Financial Literacy and Education Commission, which is made up of more than 20 federal entities that collaborate to strengthen financial capability and increase access to financial services for all Americans, including youth. And with that, do we have time for questions, or do we want to wait till after?
Well, Angela, I don't know if
we have time for questions.
If you have any questions, we can definitely take some questions at this time.
And while people are typing in questions, I think I'll go back a couple of slides to the list of all of the different lessons that are available, because I know Maisha and Tracy had picked out a couple in case you didn't have time to teach all 22 lessons.
Okay.
Which probably so. You may want to choose a couple to start with. So what would you recommend for our teachers just to get started?
To get started, I think, again, for thinking of your programs, I would probably look at career options. I would also, which is something, do they go to college, university, do they spend money to go to colleges and universities, or do they go to a career technical track? So I think that would be important. But a good basic lesson is lesson number 3, can you pay your bills? And bank your bucks. Choosing a banking partner and choosing the right banking partner is very crucial for this age group, because they're just starting out, and all bank accounts, and when I say bank, I also mean credit unions, but all accounts are not created equal. This is something that our staff in the field could help with if you ever wanted to do maybe a lesson on bank your bucks, which is lesson number 5. Lesson number 6, bread and butter, can you manage your paycheck? And something that's new to this, to Money Smart for young people, is lessons 21 and 22, entrepreneurship. Again, given this program, I think that might fit in quite well. And I was looking at this list earlier, and I was thinking probably retirement planning, risk management and insurance, those are probably, charitable giving, those are probably some of the ones that I would, if I didn't have time to teach all 22, I would probably not teach those. Credit and credit cards are also pretty important, I think, just because people can get into trouble really fast on those.
Maisha, did you have anything to add to those lessons?
Well, I know that you brought up credit. You know, I know these young people, I've met, you know, we talk to young people around the country. They seem to be kind of like hip to staying away from credit cards. I remember back in our day that was not true. So I think just noting to them about, you know, building your credit, I think that would be a great opportunity to talk about that and opportunities later on down the line, such as, you know, so we talked about retirement and charitable giving may not be so many years down the line, but the young people can be, you know, aware of that as they approach adulthood and entering into college, that they want to be aware of why we emphasize protecting your credit, making sure that you don't have a large chunk of change that belongs to somebody else, and to protect your name. And so I think that was also another topic that I thought would be interesting. Like you said, it's not pressing, but a little bit later on down the line.
Okay, great. Thanks, Maisha. And I don't see any questions in. Please, as we're continuing, type your questions in the chat box on the side, or there's a Q&A box as well, and we will have time for those at the end. So now I'm going to turn it over to Chris Somerville. She is one of our grantee presenters. She is from St. Paul Public Schools in Minnesota. So I'm going to turn it over to you, Chris, and Tina. She has another guest, Tina, who works at the credit union in the school there, that's going to share some information. And then we'll have time for Q&A at the end. So, Chris, are you with us?
Yes. Can you hear me?
Yes, we can.
Awesome. So when I need to go to the next slide, I'll just say next slide, right?
Nope, I can give you the ball if you want to turn it on your own.
Okay, awesome. Thank you. Okay, hello, everyone. As she introduced me, my name is Chris Somerville. I'm from Como Park Senior High School in St. Paul. We're supposed to have a huge snowstorm here tomorrow, so we're all hoping for a snow day. So I was asked to talk a little bit about—
Yay, the snow day. It's 70 degrees out here in D.C., so yay, the snow day.
I just don't even believe it yet because it's been like 58 the last 2 days. Okay, I'm going to try to go to the next slide here. How do I hit that again?
It's right at the top above the slide.
Okay, thank you. So at Como, we are a full 4-year program where our students are taking a business course for 4 years. They're earning articulated credit through one of our local community colleges called St. Paul College, as well as we work under the NAFS umbrella, National Academy Foundation. And so all that means is that we really are all about getting them into the business world as much as we can and getting them business exposure as much as we can. As well as we're huge into trying to get all of our students some sort of job experience, for sure an internship experience by junior, senior year. So we start right off the bat with financial literacy, 9th grade. They're taking Principles of Finance, where they will do a project that year about any financial literacy topic they choose. So it's kind of crazy to see 9th graders talking about, you know, buying a house. But it tends to work when I ask if you want to live in your parents' house the rest of your life. So then 10th grade, they're already taking business and global economy, which is an articulated credit, accounting, business ethics and communications. And again, so this is an overview of what we're doing here at Como Park High School. So again, what I was really talking about is how we're trying to make financial literacy fun and how we're really trying to teach it right off the bat. And so not like this is anything new, but we have a fake money system in our program. The students will receive, last year they were receiving paychecks, and our students are cohorted, and they have an English class together, a social studies class, and a business class. So they literally would receive a paycheck that would show what teacher, how much they were giving them for the week, and we would leave it up to the teachers as to how they wanted to pay their students, if it was based off participation or attitude or what have you. And then we would take taxes out and try to explain that that was, you know, paying for us. And but literally they would receive a paycheck. And then with that paycheck, they could either cash it out for dollars or bucks, or they could put it into our credit union at our school and then learn the concept of interest. Or spend it. And, you know, we had some students, we bring in a cart, right, and we sell the flaming hot Cheetos. and we would set the price off of supply and demand. So we're bringing all of this already to them in 9th grade, and of course they're like learning to everyone should not raise their hand for the flaming Cheeto because maybe the price will go down. So trying to bring the whole idea of financial literacy in a fun way. So these bucks we do a new design, which the students design every year. We do a conversion rate, which also kind of gets them thinking about how much they would need to convert it to another, foreign country. And the biggest thing that students always want to buy with these fake dollars is our AOS sweatshirt. So everyone's always saving up for a sweatshirt, and it's always fun when they're able to get one. So again, the fake money system seems to be working great. But other things we do too, we act as volunteers for younger students. We have junior achievement. I'm not sure if everyone here does, but our students will go in and act as the volunteers in their biz town, which is like a made-up world. And so our students will be the volunteers, as well as we go into elementary schools, as well as junior highs, and we teach how to be rich, which is never fun because it ends up being save your money. And then, again, all 9th graders do a financial literacy topic project, and we do as many financial careers panels as we possibly can, just to let students know that being in a financial career isn't always all about money. So, but then what was happening when I was talking to Angela about doing this, I noticed there were more questions about our credit union. So I decided to ask Tina Jones, who is our credit union liaison, and she is here to answer more questions about the credit union in our school. So Tina, take it away.
Okay, great. Thanks, Chris. I apologize that on top of the snowstorm, I also have a Minnesota cold, so may sound a little nasally. So the student-run credit union is just a really neat concept that credit unions around the country are actually bringing not only to high schools, but also on the elementary level. And we're preparing students for careers in the financial world. And partnering with Como Park High School and then actually 3 other credit unions in high schools in St. Paul, we've been able to bring this concept to a number of students at the high school level. Some of the questions I believe that those of you who were looking to have answered was how do students, what do they need to open up an account? The credit unions are unique. They are ran during the lunch hours by the students who are working in our school branch, where the students are involved and they're paid, they're compensated. And students and staff can come into the credit union and they can open up a membership, a highway membership, or a Como membership, a Como Cougars membership. And really we've been kind of innovative. We found that it's sometimes difficult for students to maybe open an account that they may want to open on their own without a parent. So we have designed and created this student savings account where it's strictly a savings account and they can have any paychecks directly deposited into this account. So they're learning about direct deposit. They can also learn about the online banking. So they're able to track their expenses, their budgets, and set goals and save for things that a high school student might want to save for. So it's been a really unique type of account that they can open on their own and really be responsible with it. Other ways that we get the students engaged with the credit union in the high schools is we take a look at the high school branch is the students having them look at it as like their business. So they're kind of like the entrepreneurs. So we let them be creative, innovative thinkers, come up with ideas on how to engage their peers and the staff and so forth, whether that's creating some excitement around a contest or, like Chris had referenced, maybe going into the classrooms and teaching financial education to their peers in high school. So it's been just a really unique type of learning experience, an opportunity for the students to participate in, not only the ones that are employed and working at their school branch, but all others around to their peers. So in order for them to open up an account, it looks like There's some questions about what is the minimum balance to open an account. Normally it's just $5, and that is the student's $5. And so that establishes their membership, their ownership at our credit union or at their Cougar branch credit union. And incentives, like Chris had mentioned, the AOF bucks. So some of the students may want to be, you know, saving their AOF bucks and depositing them into their credit union branch account. And we'll do matching incentives on those dollars. So say, for instance, a student brings in $20, we could match up to $20 of those dollars that they had deposited. So it's kind of fun to get them involved in the incentives. And we actually have the student employees that are working at the school branches come up with these ideas and get them to be innovative thinkers. And it's just been a really unique concept, a great partnership all around. I know that Chris had mentioned the junior achievement. Not only is our business, our credit union actively involved, but our employees are actively involved with the student-run credit union branches, and then also the financial education in the schools. So it's just been a great win-win for all of our community here. Any other questions on the credit union branches?
I absolutely love this idea. I know, I love it. This is Isha. I just think that it's fun, it's not expensive, it's a way to get young people more involved in learning, contextual, hands-on learning about money instead of just always being, I know you guys have your AOS bucks, which are kind of like the quote-unquote fake money, but you also have some real context to money as well that's really greenbacks, and I think that's a wonderful way to learn and to learn about interest. You know, sometimes you look back at all this innovation, and I wish I would have had that when I was younger. So, you know, you look back and think about what we had as youth and what young people have now, and we're really hoping that these tools will help prevent them from mismanaging their family funds or getting themselves into fiscal trouble that they're still paying for into their 40s and 50s, as many of us know people are in our age group, you know, suffer through. So I think that's just wonderful, and there are other schools across the country that are doing this type of branches, and I think that it's great that we have one for YCC, and you guys can share that success with the rest of us. Angela, is there anything else, or are we just taking questions now?
I think Tracy had a couple comments or questions she wanted to ask.
Sure, absolutely. Sorry, Tracy.
Hi, Chris and Tina. This is Tracy Morris with the FDIC. The FDIC just wrapped up a youth savings pilot with, we had 21 banks that were participating in the pilot, and they had a footprint in at least one school, and some had a footprint in 5 schools, I think. So this is something that's near and dear to my heart. And one of the things that we're asked is, how do you get an in-school bank or an in-school financial institution, so either a credit union or a bank? And sometimes what we found throughout our pilot was that oftentimes it was a banker sitting around a table, let's say at a Rotary Club meeting or a Kiwanis or some meeting, and met a principal at school, and they got to talking about, you know, banking young people. Other times we found that teachers went to a bank and said, gee, we really would like to have some type of an opportunity for our youth to be banked, and brought them in that way. So I would recommend that anyone on this call that didn't have an in-school financial institution program, whether it be a credit union or a bank, that you approach your school administration, make sure that they're on board with inviting the credit union or bank into the school. And these programs, it sounds like a highway federal credit union is fairly sophisticated at the school, but these programs we found in the elementary school for that age bracket that oftentimes it was just a banker would go in and set up a teller window in the lunchroom. We also found, so it can be very easy to do, or there's other banks that have gone in and they've actually built out an actual bank, and if you're right by the school cafeteria, and if your back is to the hallway, you would think that you were going into any brick-and-mortar financial institution. It's only, so there's different levels of sophistication, but definitely it's a good way to get young people knowledgeable of not only financial education, but putting it into practice and having that experiential learning opportunity. So I think this is great. So
awesome. Awesome.
Thank you. It's been a great opportunity, like I said, for our St. Paul community and for our financial institution, and being a part of the Como community there, bringing Highway to the students and actually to St. Paul at the district level has been phenomenal. And starting off, go ahead.
You have student tellers most likely?
Yeah, so what we actually did is we created a position. It's called a Student Advocate Associate. And like I had said, we take a look and have the students actually create and run their student-run branch. How do they do their banking? How do they want to market their branch? So they do have some teller capabilities that they do, their transactions and so forth, but also they're working on the marketing and the business, and we give them a budget, so they have to work within their budget, whether it's creating marketing materials or having contests, things like that. So it's kind of, it's a really unique type of, besides just the banking aspect of it, it's the career development also and exploration.
That's very, very cool. So, good. How many youth are involved in that particular branch?
The one at Como, we have 3 students that we've hired, and they're compensated. So they'll work during their lunch hours, and then also they'll work 1 or 2 days a week at our Highway branch in St. Paul after school. And if there's different activities that are taking place in the community, or if there's parent-teacher conferences or different events that are going on at school, we also love to get them involved with those also. So they have opportunity to get outside and kind of explore different areas of the credit union, and job shadowing opportunities also.
Wow, that is wonderful. So I don't see any questions coming through the chat. Maisha, was there any other questions you had or anything you wanted to add?
No, I just think this is a great presentation. I wanted to take some time to thank Tracy and thank our colleagues there in Minnesota for presenting and sharing their expertise with us. And hopefully this time sparks some interest in using these wonderful tools that slide with those lists. That list of resources is something that we also cite a lot when we're doing financial literacy. I know our colleagues here use that, and we have it on our community of practice as well. And also just kind of sparking the idea of having student-run banks or credit unions or programs within your school, even if you're not using real dollars or legal tender, trying to find out a fun way to incorporate learning about interest, learning about stocks, learning about money management and getting paid for good work, and about taxes, and you're not going to get your full check. So I think that is also an awesome opportunity to kind of spark that interest, especially with in-school youth. I know we have some visitors on this webinar who are dealing primarily with both in-school and out-of-school youth, but with in-school youth, of course, they are more of a controlled group, and you can do that more so. But for out of school, thinking about ways for that type of learning is also beneficial as well. So thank you so much for your time and working with us at the national office. So our next training, we have a peer-to-peer call on mentoring Thursday, March 9th. Hopefully you all received that invitation. I believe it was yesterday Angela sent that out. You have to register to basically let us know you're going to be joining us. It's not a webinar. It's not a WebEx. We're not going to have a PowerPoint slide. We're really going to depend upon you, all of the YCC grantees, to share amongst each other your successes and challenges with mentoring. I know we're coming up on the new year, and we're trying to kind of get that mentoring thing locked down. Some of us have done a really great job, and some of us are still struggling through it. So we want to make sure that we all are on the same page. So hopefully you all will have that opportunity to talk, and we look forward to learning from you all on March 9th. And Angela, did I miss anything else? Are we good?
No. We're good. I just want to remind everyone that when you exit out of the webinar, there will be another window that pops up with a survey, and we do ask that you please take a few minutes to fill that out. Your feedback does help us to shape these TA resources and webinars and phone calls that we're providing for you. And also a quick reminder, in about 3 months after this webinar, you'll get a second email, and we'd like to do a follow-up a few months later to see how you're using the tools and resources that we shared in the webinar. So please do take a few moments to fill that out when you do receive it. That does help us. We do read those. We do read your comments. We do incorporate them into our TA plan. So thank you all very much for joining us today. We hope you learned a lot, and have a great rest of your day.
Take care, everyone.
Thank you.